Hey there, everyone. Steffan Walters here, the owner of New Mexico Home Group and qualifying broker of the Jason Mitchell Group here in Albuquerque. Here today with Michael Bowen, one of the most amazing lenders, most knowledgeable lenders I've had the pleasure to work with. Want to do a quick introduction on yourself real quick?
Sure. Thanks, Stefan. My name's Michael Bowen. I'm with Waterstone Mortgage. I've been with, as a matter of fact, I just had my 5-year anniversary with Waterstone. They sent me a nice email, and I've been in the mortgage industry since 1989. So that's coming up on almost 25 years, 35 years now. So I do all kinds of lending, FHA, VA. I'm a Homes for Heroes lender. I also do Fannie Mae, Freddie Mac, and we've got the first-time homebuyer program available here through the New Mexico Mortgage Finance Authority as well. So if you're interested in looking at any of those programs, I'd be happy to chat with you. My name again is Michael Bowen. I'm with Waterstone Mortgage.
And I'll put all your information down on the link in this video as well. And with
Excellent.
that introduction being said, I mean, that's why, you and I are actually chatting today. I've had the pleasure of working with you for a couple of years now, and rightfully so, because you're one of the best out there and have some of the most experience, at least from, people that I work with, pretty much anyone. So, you know, 35 years in the business, have you ever seen a market like this that we're currently in?
I haven't. This is an interesting market. I've seen markets where we have some higher rates. When I got in the business in '89, rates were 13.5%, and people bought a lot of houses. It just was kind of the norm at the time. And people have to have a sense of ownership as well. I mean, when you own a home, what it does is it brings you into the community, right? It bonds you to a neighborhood, and it's a lot different than renting a property. And so even with these higher rates, and even when they were 13.5%, people were still buying homes. So high rate markets are not unusual. Since 1989, rates have continually dropped, but there's been a couple of times that they've moved down and then moved up considerably as well. And even in those markets, you always had people that wanted to purchase versus rent. The real problem with this market that's a little bit different is the supply side of it. We are by the estimates from the Realtors Association and the National Mortgage Brokers and Bankers Associations both are stating that we're about 5 million households short across the country. And you don't think a lot about it, but 5 million, you think, well, gosh, we should be able to hammer that out pretty quick. But that's a lot of households. And there's a couple of things that are creating some problems with that. Number one, if you think about it, if we're 5 million short, and we, on average, as a matter of fact, the housing stats came out today, unexpectedly, just today, and this tells you how much demand there is, and that people are moving forward. Just today, the housing stats in the U.S. housing starts in the U.S. unexpectedly jumped 21.7% month over month for a seasonally adjusted annual rate of about 1.6 million properties per year. So there you go. We just bumped 21% to get to 1.6 million properties a year. And I just mentioned that we're 5 million households short, right? So even if you take, and on average, we're at about 1.2 to 1.4 million on an average. And then let's just talk about Mother Nature and global warming, or whatever that is, the climate change that's taking place right now. I mean, we're burning down houses, we're flushing them down the river, we've got a lot of different things that are unfortunately taking out properties right now. And let's add one more component to that. We've got a supply chain problem. If you've tried to order a washer and dryer or an electric range or some different appliances lately, or maybe even, a garage door for a new home, you're going to find that market's a little pent up. And so there's some, it's hard to get product and materials to actually build these homes. So again, let's go with 1.5 million, divide that into 5 million. What are we talking about? That's at least 3.5 years of backlogged inventory that we're looking to fill. Basically because of the millennials, right? I mean, they've all grown up, they've got families, and they want to get into houses. And we had a higher birth rate, basically 30 years ago. And now those folks want to buy, and I want them to buy as well. Problem is, rates are high and the inventory is a bit low. So that creates a seller's market also, but having a buyer who wants to buy. And that's kind of what we've got going on right now. So there you go, in a nutshell, from that perspective.
Absolutely. And then the prices, I mean, back when rates were higher, the prices were a lot lower. So then, it kind of, they kind of matched each other. But I think that's one thing that's still, and even the people that I'm seeing right now, everyone was kind of worried where the rates were going with it when they were getting to 6 and 7. But I feel like people have finally digested that, and that's why there's still so much demand right now. We saw a little bit of a pullback, especially here in the Albuquerque market, but people need a place to live, and I mean, it kind of is what it is. I actually was just checking out some stats earlier, and we just hit a new sold median sale price for Albuquerque, which is 340,000. That's the highest it's ever been. It's insane. I can even do a quick screen share with you real quick just to kind of show the stats, because again, it's not something I'm used to seeing, but
I think when
you
you
know,
say not, it's not sustainable.
it is not
I think
sustainable.
I
Yeah.
think I think that's kind of my concern with regards to that piece of it. At 340,000, with an average, working income, it's a little hard to get into a property right now. Especially when you start to compound that with the rate side of it. And then, even if you look at that, let's take a look at your list chart right quick. Tell me what I'm looking at here, since you know it a little better than me, and then I'll kind of expand on what I'm thinking.
So we have a few different kind of charts, and this is just like the main market summary. So of course we have like the number of listings, and this is over the course of 12 months. So you can see the number of listings over the last 6 months has been going down. Listing prices have been going up. And again, we just hit a new high on sold median sale price, which is, I mean, not surprising because of how the market has been, but still pretty surprising because I mean, it just keeps going up. So again, this is an all-time record. I think the highest it had been was last year at about 320 for the median sale price. And then the other thing that I always like to talk about really is the absorption rate, and that's calculated in months. So basically, the absorption rate is a month's chart that shows how long the current inventory of properties would last at the current rate of sales if hypothetically there were no more homes that hit the market. Obviously, that's not, would never happen because everyone always has to have a certain life event that, for one reason or another, makes them want to sell their home or have to move. Um,
Sure.
but that's another thing that kind of I feel is pretty interesting, is that a lot of these people who have 2 to 3 to, I mean, even a 4% interest rate, which is really good at the moment, they don't want to sell their house. So they're either turning into forced landlords, but I wouldn't really say forced, because a lot of people who I know right now are even still specifically looking for an investment property. So forced, I mean, it seems a lot of people want to actually have that investor cap on and have something that cash flows, especially if it's at a good monthly payment. But I mean, if you're looking at a 4% interest rate at, again, the average median sale price compared to a 7% interest rate at a median sale price, I mean, you're looking at about almost $1,000 difference in monthly payment, correct?
You are. I like that theory a little bit, but what I want to expand a little bit about what's happening with properties, and I think it's maybe happening with some properties, not only in Albuquerque. I'm seeing a lot of it, especially due to our movie industry here, the Air
Yeah.
Force Base and some of those kinds of things. But um, I think there's a couple things that have recently happened. So if you had a home and you refinanced it into a 3% 30-year fixed rate mortgage, you got a really nice low monthly payment. All right. Now, if you own that house and you don't want to move, you're like, I love this rate, but you know what? I really need another place. This market has afforded people the opportunity, something that hasn't happened in a long time. And what that is essentially is that it gives them the ability to take 5%, if they can come up with just 5%, right, for the purchase price of a new home. So let's say you're going to buy a 400,000. Let's say you're in a $250,000 house. You want to move into a $400,000 house. You take 400K, right? If you can come up with 20,000 and another 5,000 in closing costs, so let's say $25,000. You can come up with that 25,000. We can take you, move you into the new house, take and get a lease agreement, right? Maybe even a property management, but you have to get a lease agreement and some sort of a contractual agreement between the purchaser and the renter, or the seller or the owner and the renter. And they're going to give you a portion of that rental income to offset your existing house payment. So if you have a really nice low house payment, And with rents as high as they are right now, when you get that, and even if we only give you 75% of your monthly rental that you've got in this lease, this guaranteed lease that you've got signed coming in, right? And even if it isn't guaranteed, it's a lease. And what would happen if they default? You just basically release the property because it is a renter's market for sure. So what happens is you can rent that house that maybe had a $1,200 payment for 2,500, and we're going to be able to completely push that debt off of your debt to income books, right? So now you've got 5% down, and you go out, and if we can get you qualified, we can get you over and get you into that $400,000 house, right? You're going to be able to set that up with 5% down. And then you're going to be able to create this rental income. Now, once again, I may only just wipe out the payment, not give you any additional income for qualification, but you're also going to have a couple, maybe an extra 1,000, 1,500 bucks coming into your pocket just off of your differential in your rental income. And that really helps people, offset the payment on the new, bigger house. And because a lot of people are doing that right now, they do have the financial wherewithal to do that. They can come up with the 5%. It's putting more pressure on our supply. Yeah. And I got to tell you, some of these folks that have houses in the right areas, in the right place, and the right thing, they're not selling them, and they're turning them into VRBOs, and they're renting them out. As I mentioned, the movie industry is really strong here in New Mexico, and I think it's going to continue to grow and expand. And I feel like we're on the cusp of being kind of the next Atlanta. And if you don't understand what that means, just check out the movie industry in Atlanta. It's pretty crazy. And there's been some things politically that have changed between Atlanta and our particular politics here that is actually moving a lot of industry to New Mexico from Atlanta. If you can look at the statistics, all that's on the internet. It's kind of crazy. It's pent up supply or pent up demand, right? Just all these people who want to buy homes, lack of inventory, house prices going to 340,000. I mean, my goodness, right? I mean, if that's the median, and I also want to say something about that. I mean, I have to tell you, I see a lot of appraisals, and you look at a lot of houses, Steph, and you understand this. I mean, at 340,000, if that's the median sales price, those houses in their own right need another maybe $5,000 or $10,000 sometimes, maybe $20,000 or $30,000 just to get up to speed, right? That's a house that is in need of a little bit of love as well, because that's just the market we're in, and people who are sitting out trying to find a $250,000 or a $225,000 property, it's just not happening, and that's unfortunate. So
it is. Things
that's the other
change
side
in
of
a
it.
short amount of time. I mean, I remember a few years ago, you could find something in the Northeast Heights for maybe around 280,000, and it would be in a good location and a good buy. But the other thing why, I mean, you're mentioning new builds, and we have pent up demand and not enough supply. Places
Right.
like Albuquerque in the Northeast Heights, we don't even have any lots left.
Yeah,
So
there's no land.
yeah, there's none. I mean, so you're either going to live on the west side or Rio Rancho. So areas like the Northeast Heights, I feel like are just one of those kind of gems that aren't going to have any. I mean, there's just no chance of really that price coming down, in my opinion. It's a different market, and that's why I wanted to ask you, because you've seen kind of like the ups and downs throughout the years, 35 years in the business, and not really seen anything like this so far. And again, in my opinion, I feel like there's just a lot of people wanting to be that investor right now, where you're saying either they want to be have an Airbnb, or they want to do even just long-term rentals, and because they have such a good payment, a good monthly payment. So a lot of factors that go into it. I think at least we've been in Albuquerque for a long time, and we kind of have our roots here, because I feel like there's a lot of people moving in from out of state. I mean, even just over the weekend, I had at least 4 different people come through my open house that are moving in here from Seattle, a couple of people from Florida. So I mean, we're this hidden gem that's kind of being found, and it's exciting to see, but at the same time, it's a little we're kind of like we're outpricing the locals in a way, which is also a little sad. So it's interesting.
Well, and that's unfortunate for our market, and that happens in markets, right? I'm very pro housing. I'm 100% pro housing. I think everybody has a right to home ownership. I saw just an expose, I think this weekend, that these guys are building these entire subdivisions just for rentals. And people are digging it. I mean, I like it. I think, it does a couple of things. What number one, build the house, right?
Yeah.
Get a property out there for somebody to live in. I need them in a house and not on the street. I'm also on the board of directors of a homeless organization, nonprofit here in town, and it's a problem for everybody. And again, this house valuation increase and wages staying fairly flat or just create some struggles. But I'm very pro housing. I do think, again, I think there's a lot of opportunities for people. I think what you need to do if you're thinking that you want to move or make some sort of a move, the first thing I think they should do is they probably should call me first, talk about financing and look at that a little bit. But maybe they want to talk to you a little bit about the inventory and what's out there and where they might want to live. Because I think what happens is you need some sort of realistic timeline on what all this might look like.
Mm-hmm.
I think they would say, hey, I want to move, but I want to move to Nob Hill, one of those pressure points again. There aren't any more Nob Hills being built, and there aren't any of those 1950 houses that we all love being built. And so you kind of got to go get one and wait for it to come to you in some sense. And I think they talk to you a little bit about what that market in that area looks like, and then secondly, talk to me and find out what their financial opportunities are, and then kind of push forward with that. Again, I know that there's, and the other thing that happens too, and it's natural ergonomics, especially here in New Mexico. I mentioned the air base. There's a lot of people that have to move, right? They pick up and they go. And so we're still seeing a lot of inventory come into the market. I think what's happening is that inventory is just selling really quickly. When it used to stay on the market for 3 or 4 months, now it stays on the market for 3 or 4 days. But it's
Yeah.
the same amount of volume really that's pushing back through that funnel are pretty close.
Mm-hmm.
You just showed us the numbers, right? The amount of inventory actually, unfortunately, is going down. So I'm not telling the total truth, but there's still there's a lot of opportunities out there. I have a lot of buyers who are looking right now, and if they'll just give it the time, and if they've got the time, then those things are popping up, and they're being able to achieve their goals and their dreams. So that's kind of my position on it. If you don't own a home, let's look at your rent and what you're paying in rent and where your rent's going. And let's talk about what we need to do and where we could maybe put you into something that would be comparable in your rent, because I think you're going to find that those numbers are kind of a little askew as well. So
Yeah, I
that's
mean,
kind
on average, the rental price is about 25% higher than what your actual mortgage would be if you were to own that same home,
yeah.
or buy a home very similar to that. And then there's a 98% occupancy rate within the rental market in general. And again, the other thing is based on what you're just saying as well. I mean, we work with so many different relocation companies, and there's people moving in out of state for, again, the film industry, Amazon, Netflix. Seems like the labs just hires people in bulk. So, I mean, there's people moving in, there's people moving out. Again, we're a big military state, so we have that for the base as well. But really just having the right expectations and being patient, knowing the timeline, knowing what's needed. And that is one thing why, we send people to you right away, because we want people to know what they can afford or what they're comfortable affording, rather than just hopping on. Anyone can just hop on these sites these days and take a look at the home. And that's also why I think that's kind of driving this frenzy, because that's another thing that I'd like to point out. That's completely different than it has been in any other market, right? When have you been able to hop on your phone and see the most high definition photos and do a virtual tour? In the last 5 to 6 years is really kind of when that started to explode. I mean, I was looking at some of my first homes that I sold the other day, and the photos were absolutely terrible, and that was only 7 years ago. These days you can feel like you're actually in the house, so people can actually purchase a home from out of state, be comfortable with it. I mean, we do virtual tours and things like that for our relocation clients all the time, and that's why we're relocation specialists. So there's a lot of different factors that have made this market change in a short amount of time. But again, like you're saying, having the right expectations, the right timeline, and being prepared, by knowing what you can qualify for, what you want to qualify for, because you may be able to qualify for 450,000, but you're not comfortable with where that monthly payment is. So, and that's why I like to tell people all the time, talk with the lender, get comfortable with where you want to be at, and then we can kind of create that personal customized search to kind of find exactly what you're looking for. So, I think that's definitely a great way to kind of end and wrap up. I was just telling Michael, I want to kind of do this at least once a month, just kind of give you a quick update on how the markets are and everything. With that being said, where are rates currently now, and where do you think they're going to go in the near future?
Let's talk a little bit about that, but I want to just load on what you just mentioned. That's the great thing about working with Steffan is that, he helps me set you up for success, right? Everybody that we have worked with, we've taken the time to make sure that we were going to help them succeed. I mean, you're a customer for life, right? I've been doing this 36 years. I've got grandchildren of some of the parents that I've done mortgages for in the past coming to me. And so it's really important. I feel like probably the biggest part of my job is just education. I'd love to educate you. And I know that there's a lot of education and information available between the two of us. But let's talk about rates. Rates right now are, yeah, goodness gracious, they're kind of high. They've been trading in a band. The 10-year Treasury bill or the 10-year T-bill is really what we track. It's been trading in a band between about 325 and 375. And so that's been crushing or pushing rates into a kind of a box at about anywhere between 6.75 and 7% for a 30-year fixed. You could structure that out with no points and should be able to get that rate pretty easily with no points. You could probably pay a point if you had a point is 1% of your loan amount. So if you bought that $400,000 house, you put down basically the 5% on that, you're borrowing $380. If you paid a point, you'd have $3,800, and you might take a rate from 6.75 maybe down to 6.6 and a quarter, right? Something like that. Once again, I think what happens is you don't really need to get caught up in all that minutia. What you really need to do is you need to sit down, put a good solid plan together, know where you're going, set the right expectations for yourself, get some information from me, get some information from 10 other mortgage guys. It would be my best recommendation, just to, learn what's out there, and educate yourself and get set up in a position for success and move forward with it. So, but I do think long term, I do think rates are going to come down. And the reason I say that, obviously, is you're seeing the Federal Reserve, they're pushing up short-term interest rates. That's the money that we pay or a bank pays for overnight funds from the Federal Reserve. Obviously, if they have to pay a higher price, then they have to push that out into their car loans and out into their credit card loans. And that's kind of what we're seeing. What happens inversely with that, when you take and raise these short-term rates, it has a tendency to take inflation out of the market, and long-term rates follow inflation, and they can kind of trend down together. So the Fed's doing the right thing. They're making good policy decisions. They're taking a little breather right now. They had this window where there wasn't a lot of activity or information about inflation. And so it kind of was a free look for them. And they said, look, we're going to hold off on raising rates. We'll see what happens. And then we'll see where we go down the road. Now, what we got today was we got unexpectedly housing starts jumped 21.7% month over month. All right. That's a pretty crazy number. That's a good thing and a bad thing for me. Right. Well, it's a good thing. And the only reason it's a good thing and a bad thing for me. The bad thing is the Fed's going to see that and they're going to go, okay, the economy's heating up. They're building these houses. They're hiring more people. There's going to be more jobs. They're going to buy more refrigerators and stoves and garage doors. Right. All of those things drive a little bit of inflation into the market. And the only way you can curtail that or bring it down is for the Federal Reserve to keep moving those short-term interest rates up to try to drive the longer rate down. I do think in the next 2 to 3 years, and I think if you heard the consensus of most economic advisors out there, they do think that rates will come down, maybe into the mid fours. Who knows when or what that looks like. I've been doing it 36 years and I don't know anything about it. I can guarantee you that. I know a lot of the things I should track or do track, and I do understand the market and how it reacts, but where it's going, it's anybody's guess, right? We're going to hope that the Fed gets it right. I'm going to tell you, if you don't own a house right now, you should certainly buy one. If you do own a house today and you're interested in getting into any sort of investment property and keeping your house, I talked to a guy the other day and he thought because he might move out of his house, he was going to have to refinance it from an owner-occupied loan to a non-owner-occupied loan. It doesn't work like that, guys. If you're in your house and you've been in that house for at least 12 months per the mortgage that you signed, that house can stay right as it is with the existing mortgage it has. Nothing has to change, and you can move a renter into it and it becomes a non-owner-occupied property, but the mortgage just stays right like it is. And then you come over to me and we can get you an owner occupied loan on the new house that you're going to owner occupy, completely above board, completely legit, and a way to build not only wealth, but equity in two homes at once, right? So you're kind of winning on both ends. Anyway, that's about what I got to say about it. I really enjoy your time. I got to run. Steffan, thank you. It's always good to see you, buddy. Thanks for taking the time, for giving me an opportunity to speak a little bit about some of the things I know. And if anybody has any questions, please reach out to me. If you think I'm right or wrong, I'd really like to hear about it. So I've always getting educated myself as well.
We know you don't have that real estate crystal ball, so we won't hold you to it. I mean, again, it's anyone's guess, but I'd love to hear your opinion on it. And thanks again for all your time, Michael. Appreciate you, and we'll see you on the next time.
All right. Thank you, sir.
Have a great day.